Welcome to the Deep Dive. We unpack complex info to give you the key insights. Today, we're diving into BlackRock, the financial giant. We want to understand what's really behind its stock performance, its financial health, and where it's heading.
Exactly. We'll look at the technicals, the stock chart signals, but also the fundamentals, like its financial strength. And then there are the big strategic moves they're making, some really ambitious goals, but also, challenges like ESG scrutiny.
Okay, let's get into it. So BlackRock stock, anyone watching knows it's been on quite a run since, January 2018?
Yeah,
consistently higher highs, higher lows. It screams long-term bullish trend, trading now near $1,048. But here's something interesting. Back in October 2024, the price broke clear above a resistance level from November 2021.
right. And closed above it, that's a strong confirmation.
Definitely shows real bullish strength. And this whole upward wave, it started October 2022, and it's really respected that rising support line. That area between $500 and $630 seems like a pretty solid floor now, a demand zone.
It does. But here's a wrinkle. While that long-term picture looks solid, the monthly RSI, that's the relative strength index, it's showing what we call a bearish divergence. Kind of suggests momentum might be slowing down, maybe hinting at a pause or a correction ahead.
A divergence. So it's like the price is going up, but the momentum isn't quite keeping pace.
Exactly, which raises the question, what if it breaks that last peak around the 1,086 IVs on the weekly chart? If it pushes past that level? Well, we could see it climb towards higher Fibonacci extension levels, maybe the 1.13 to 1.27 zone first, and potentially even higher, like the 1.618 level as a bigger target. So still potential upside if it clears that hurdle.
Okay, so a potential short-term warning sign with the RSI, but clearing that 1,086 level could unlock more gains.
Well, got it.
Now, moving from the charts to the bedrock, how solid are BlackRock's financials? Looking at Q1 2025, they look pretty stable, right? Almost $2 in current assets for every dollar of current liabilities.
Yeah, very stable. And that debt to equity ratio, around 0.28. That's really conservative. Low leverage. It points to a very solid financial structure, not overly reliant on debt.
Right. And that must connect to their profitability.
Absolutely. You see it in the return on equity around 13.9% and return on assets at 3.7%. These show consistent earnings power. Basically, they're good at making money from their assets and the shareholders' investment.
And valuation, PE ratios.
The trailing PE is about 25.4, forward PE around 22.4. A bit above historical averages maybe, but it reflects market confidence. Investors seem to believe the growth story. Their strong financials give them the room to make these big bets.
Speaking of big bets,
Yeah.
their Investor Day on June 12th, they laid out some seriously bold ambitions. Doubling operating income to $15 billion. Growing revenue to $35 billion by 2030. That's ambitious.
Very. And a huge part of that is the pivot towards private markets and tech. They want those areas to be about 30% of revenue, up from 15% now. That's a major strategic shift.
And they launched that iShares Texas Equity ETF too. Plus the plan for retirement funds. Integrating private market assets into target date funds by mid-2026. Aiming for an extra 50 basis points in returns.
Yeah, that's potentially huge for retirement savers, bringing private assets, usually for big institutions, into mainstream retirement plans. But, these aggressive strategies, especially in private markets, don't come without challenges.
Like the external scrutiny mentioned earlier, ESG concerns.
Exactly. You saw the Sierra Club Foundation divesting recently, citing climate engagement concerns. That kind of pressure isn't going away. So how do they balance growth with these increasing demands around environmental and social factors?
That's the tightrope they have to walk.
For sure. And with the July 14 earnings report coming up, everyone will be watching asset flows, profit margins, and crucially, how well they're actually executing on that private market strategy and navigating the scrutiny.
Okay, so wrapping up, BlackRock seems financially solid, strong stock trend, despite maybe a little short-term caution, and really ambitious growth plans, especially in private markets.
Right, but they're also juggling that increasing pressure on ESG issues. And this move into private assets for retirement funds, that's a big deal.
It really is. So the question for you to think about is, what could these shifts mean, not just for BlackRock, but for your investment portfolio? And maybe even the whole financial landscape as these private assets become more common, something to mull over.